Welcome to the Del Walmsley Radio Show. Del challenges the status quo, questions everything, and empowers you to return to your core beliefs to make your life better. If you're ready to hear the truth and get your roadmap to the lifestyle you really want, the next hour will change your life. And now, your host, self-made millionaire, national award-winning investor of the year, CEO and founder of Lifestyles Unlimited, Del Walmsley.
Welcome to the Del Walmsley Radio Show, where the hype ends and the help begins. I'm your host, Del Walmsley, and as always, we're working on your financial freedom. Today, my friends, we're going to return back to the mailbag. I'm getting a lot of mail, and interestingly enough, a tremendous amount of the mail has to do with inflation. More and more people are worried that inflation is going to make the decisions that they were considering their normal approach to life to be wrong, and that some drastic change in their activity mode should come about. Now, today I want to talk about that, and we'll start with an article someone sent me here, and let me just give the name out of the article. Didn't even say who it's from. It's called Inflation. High inflation environment places spotlight on multifamily, self-storage, and hotel assets. With inflation pressure persisting, the consumer price index by another multi-decade. Sorry, I could read when I woke up this morning. Multi-decade high margin in March as a multi-factors drive ongoing upward price movements. What they're basically saying here is that inflation is getting worse, not better, that the Democrats aren't admitting it has anything to do with what they've done or what they're doing, so there's not going to be any rescue to it. In fact, they're actually doubling down on their belief that what they've done and what they do will make inflation better. By spending more money, there's going to be less inflation. By taking costs away from people, for instance, the other day we discussed this, but they doubled down on it again today in the news that they want to eliminate student debt. Now, obviously being unfair, because think of all the students that paid for their debt, and now these students don't have to pay. But secondly, it's over $1.6 trillion in additional debt that will get not eliminated, just shifted from the students and the parents that signed for it, shifted onto all taxpayers and the giant trillions of dollars of debt that we have right now. It will be added to it. So you increase the deficit and you eliminate somebody's debt, which in any accounting terms is actually a gift. When you eliminate debt, it's a gift. It's actually income. And so you're shoving more income, more cash flow into the economy, which in turn is going to create even more inflation. So that's how this article starts, gets into all that we covered yesterday and probably the day before and the day before that. But the next point it makes is this. Climbing prices underscore prospects of multifamily investments. Hard assets like commercial real estate tend to retain their values during periods of high inflation better than most other alternative investment vehicles. Property types such as multifamily that are able to adjust rents more rapidly tend to be the most inflation resistant. Boy, I tell you what. So the obvious here is that because you can change the rent, you can adjust for inflation. So if your costs go up, you can shift that off onto the tenant. Now, you know you got a 12-month lease on the tenant, right? But what you have is turnover. And in the apartment industry, the typical turnover is about 50% of the units turn over in a year's period of time. So you can recoup the costs to the future tenants as this inflation continues to grow. Now, short-term leasing, right? The shorter the term the leases, the more inflation resistant it would seem to be, correct? And so you go from that, you go down to just having short leases. Now, why wouldn't you have short leases during inflation? For the same reason you wouldn't have short leases during non-inflation periods. You want to be able to hold on to your tenants because turnover is actually the largest cost there is. So you don't want short leases, but in this case, this argument would say that shorter leases tend to give you more of a fight against inflation. The shortest lease we know of is called a hotel room. And hence hotel rates can adjust daily, which is phenomenal as far as fighting inflation. But the problem is when inflation becomes too large, and this article actually goes into this, you now have other kinds of problems, like people not wanting to travel because it's too expensive, because they're broke. They can't afford the gas. Airlines can't afford the gas, so airline tickets go up in cost. And so as inflation becomes very prominent and very large, hotels get hit on the other side, which is occupancy. So there you have it. They also talk about self-storage, which has a lot of potential against inflation resistance for the fact that two reasons. One, of course, the leases are short-term, 6 months to a year, whatever they are. And secondly, because as inflation becomes rampant and people can't afford to rent anymore, think about it. I can't even afford the rent of a single apartment all by myself. I'm going to have to move in with somebody else. And now we have two sets of furniture. Now, what do we do with all of our furniture and our belongings? We may decide to go down and rent, right, a storage unit. In which case, they would benefit from both the ability to raise the rents and the ability to increase occupancy, making storage units a very inflation-resistant investment. All good ideas, all interesting stuff. The bottom line is, in my mind, as we work our way through this, is how long does this all take to splay out, right? And I said splay, not play. I should have said play, but I was really thinking splay as it splatters out all over the place, as it splays out into our economy. How long does it take for this to happen? And where do the curves start to occur? When and where do those curves start to occur? That's, to me, really the question of all this. Is it going to happen within the next 3 months, 6 months, a year? I told you yesterday I'm closing on a couple deals right now this week. I'll close on 2 more big real estate deals. And what I'm finding is the prices that I paid for these that I'm closing, I've found 4 or 5 other ones that are very similar to it that I could get for a lower price. Interesting. Have the prices already started to turn? And if so, should I start buying? Now, the last time we had a Great Recession in 2008, real estate apartments were selling for about $35,000 a door. And I started buying when you could get in for about $28,000 a door, $26,000 a door. Thought I got in at a good price until a month later I was able to buy them for $18,000 a door. And then a month later, I was able to buy it for $14,000 a door. And then a month later, I was able to buy them for $8,000 a door. Now, I made money on all of those, by the way. Every single one of them. Even the one I paid $26,000 a door for, I think. I made $3 million on that real estate transaction. Made mega millions on the ones I bought for $8,000 a door. I mean, it was just incredible. So what I'm saying to you is my belief system from my past experience is telling me that you buy into the lowering prices. Now, why do I say that? Because I became price sticker shocked to where every time the price went down, I said I would never pay that old price I paid for anymore. And it kept going down and down and down and down. And the moral of the story comes at the very end when I bought my last property at $8,000 a door. And I renovated it and put 3 other properties on the street out of business. They went bankrupt, and they came up for sale. And I said, yeah, I'll buy them for $17,000 a door. I paid $8,000. I'll give you double what I paid. I'll give you $17,000 a door. And the guy said, no, they just all 3 sold for $26,000 a door. And that's when I realized it had turned around on me. It had turned around rapidly and very deeply. And so, my friends, you want to be buying on the way down. Otherwise, you might miss the down and end up buying on the way back up. Take a short break. Be right back with the Del Walmsley Radio Show.
Welcome back. Now here's some more unconventional wisdom to set you free from the man on a mission to retire America, one person at a time, Del Walmsley.
Welcome back to the Del Walmsley Radio Show. Today we're hitting Mailbag. Got an interesting email here that has a couple of different sub-points to it, more than just major. It's not a major point, but there's a bunch of sub-points I'd like to cover. It says, my husband and I finally sat down and listened to the webinar. We've been hearing the ads on the radio station for years, but never pushed the envelope to open our eyes to the world of help that you're offering. In fact, my husband has been pushing my son to go back to college to further his education, and I was totally against giving him that advice. Your webinar really struck a nerve with me. Just seeing my husband's face when Jack did the presentation on getting a yearly job and spending money on going to college. The amount of money that you just throw away. My husband would not tell me I was right, but his facial expression was all I needed. He had forwarded the webinar to our son to watch so we can get involved and become a member as well. Thank you for making the webinar that explained why in layman's terms, and made a lot of sense. So let's look at this for a second. There's a couple subplots here. First one was, we've been listening to your radio shows, your ads on the radio stations for years, but never pushed the envelope. So why do people listen to what appears to be perfectly logical information? It's logical enough that it attracts them, but it's not logical enough for them to take action on. Or maybe it is logical enough for them to take action, but it goes against everything that they've been taught their entire life. And so the really sad part about it is I've been doing this now for 32 years. The really sad part is people say, where were you 10 years ago? Where were you 20 years ago? I was right here doing the same thing, saying the same thing, getting the points across to people that there's a way to live other than what you've been taught your whole life of go to school, get a job, work till you're 65 years of age, put money in a 401k, and then hope and pray. Hope that you don't die, but pray that you die before you run out of money, however that saying goes. The bottom line is that that's the retirement plan. It's just plan to die before you run out of money, because there is no plan for making more money after you stop working. So either you do what most people have done, which is move retirement back. Retirement is now 70 years of age. They've got you all convinced. Do you not remember when retirement was 59 and a half and you could start taking your money out without paying taxes on it? And then retirement was 62. And then retirement was 63, and then 64, then 65, then all of a sudden jumped to 70. And now you can wait and hold and not even turn your money until 70. But before, you had to start taking your money out of your IRA and your 401k by age 70. They required you to start spending your money before you die and pay taxes on it. Now they don't even want you to start taking Social Security until you're 70 years old. So they've convinced you all that you need to work the rest of your life. Does that make sense? You're going to work the rest of your life. The second thing, there used to be a deal when I went to school, and I'm 65, so move it back 30 years ago, that still would make me 35. 40 years ago would make me 25. 50 years ago, 50 years ago, when I was a teen, they brought out these actuarial tables that said, look, if you don't have a high school education, you're going to probably make about this. If you have a high school education, you're going to make about this. And it was an amount larger than if you didn't have a high school education. I don't remember the numbers. If you had a 2-year associate's degree, that number would go up to this. If you had a 4-year college degree, it would go up to this. If you had a 6 years, 2 more year master's degree, it would go up to this. And if you had a doctorate degree, your long-term financial ability to earn would go up to this. And that was believed for years to be true. And so there was a reason for education. You were investing in earnings. But all of a sudden, college became something completely different. College no longer was a place that you went to learn something, to get a job, to be better at what you do. College became another 4 years of being a kid. It was the opportunity for kids to not grow up, to not take responsibility for their life. And the investment was nothing. They were getting full boat college scholarships and or loans to go to school. So it was a paid 4-year vacation. And it was useless. Now, let's get racial here for a second. You know, Del, you shouldn't get racial on the radio. Hey, look, Chinese and Indian people I know are very, 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 very impressive upon their children that they need education. But it's not in African American dance studies or political science. They want their kids to grow up to be doctors or engineers. But they want them to be something important with earning potential. Big difference. The rest of America, we're sending our kids to school to become internet TikTok stars, or whatever the stupid thing's called. And, you know, as you sit here and you look at this, nowadays, if you run the actuarial science on college, you'll find that you could come out of school, you could come out of high school, and you could go to a trade school and end up having a better job than going to a 4-year college. That's a fact. Because there's a high demand for trade school type plumbers, electricians. They're just all, the need for them is everywhere, and there's none of them. The trades are falling apart because kids don't want to actually learn to work. They want to learn to do nothing, to be on the computer and type. And so, as we thought we were educating our children into higher and higher levels of education, we actually were lowering their level of intelligence, social intelligence, willingness to work intelligence, ability to put up with work intelligence. All of the things you would learn when you had a paper route, you would learn when you then got your first job. You would then learn when you got your second job. You would get out of school and get a good job. Those are all gone. So that investment in college is now a wasted investment for a very large percentage of people. And I don't know the percentage because I'm not looking at an article on it right now. I'm just roughing this out off the top of my head. I know a lot of people sent their kids to college and they didn't do anything with what they learned at college. But I know a lot of people right now that are sending their kids to Lifestyles Unlimited to learn how to become business people and open businesses and create streams of income they can use for the rest of their life. We'll be right back with the Del Walmsley Radio Show.
Welcome back. Now here's some more unconventional wisdom to set you free from the man on a mission to retire America, one person at a time, Del Walmsley.
Welcome back to the Del Walmsley Radio Show. Today we're doing the mailbag, and someone sent me this article or advertised. It might even be an advertisement. I can't really tell what it is. But it's just spewing a bunch of facts at us, and some of the facts are rather interesting. For what reason, I don't know, but they just seem interesting to me. So, for example, this is somebody Evans with a real estate data company. We just published our new research, which found that nearly half of home sellers, 45% of them, believe that housing market is in a bubble that might pop in 2022. So 45% of the people selling their homes are selling them in fear that there's a bubble, that this is it. This is the peak. It's over with. Now, we've been talking about this bubble now for weeks. And like I said, there's no crystal ball here. Everything the economist said is that no, there's still too much money chasing too much real estate for there to be a bubble that's going to pop and go back down. I keep hearing that from the economists. I keep hoping it's not true. I keep hearing from you, you don't believe it. You believe there is a bubble. So either the economists are trying to make us believe it's not going to blow up, or the brokers are trying to make us believe it's not going to blow up, so we'll keep paying too much for real estate. Somebody is manipulating that belief system, and yet, of course, it's still happening, and yet everybody else out there believes there's economic cycles. And what the economists are basically saying is that the economic cycle system is basically gone because of the way that the black swan effect of COVID and shutdown of the ability to get goods and services around, all the transportation systems, and the fact that people don't want to work anymore, and the fact the government has stimulated so much money in the economy, people don't need to work anymore, that this is a black swan event, that all this put together means the economy just doesn't work the way it normally works, and it's not going to go back down again. Okay? They go on and state, reluctant to miss out on seller-friendly environment, more than a third home sellers, 35%, have moved up their plans to put their house on the market. So in conjunction with these 45% believing the market's about to blow up, 35% more have said, okay, if that's the case, I better get ready and sell now. And so they're putting a lot of properties on the market at this moment. Goes on. Optimistically, 43% of sellers expect their house to end up selling for more than the asking price. And nearly two-thirds, 62%, expect it will take 10 or fewer showings to accept an offer. So think of the contrary in concept here. They believe it's in a bubble. They believe the bubble's going to blow up. Yet at the same time, they're all expecting for astronomically high offers that come in above and beyond their asking price, and they come in very rapidly, which doesn't look like it's about to slow down. Now, of course, they're saying it's a bubble. It's going to blow up. In fact, 28% of sellers expect to accept an offer within 2 weeks of listing, nearly double the 15% who said the same thing in 2019. 30% expect to sell within 2 weeks. 77% of home sellers plan to use a real estate agent to sell their home in 2022, up from 54% in 2019. Nearly half of all home sellers, 47%, however, believe Al could outperform a traditional realtor. Al, I don't know who Al is. It must be some type of software. Oh, Alyssa. There it is. Oh, there's the advertisement. Alyssa. Would you like to speak with one of our researchers? There we go. It was an ad. Interesting facts, though. Interesting factoids are brought up in that article. Let's see, what do we got for time here? Okay, the next one says, Del, my wife and I are going to register for one of the upcoming online presentations. Listening to your March 11th radio show and wanting to submit a question. We have 3 rentals in College Town that generate twice the cost of the mortgage. We have plenty of ready cash and are interested in passive income. Should we buy another house, or is it better to get the lifestyles and go for the passive route? Don't want our last name used if you have any questions on the air. Okay? The answer to this question from myself is that I would keep the houses. And if they have good loans on them that are long-term, I'd keep those good long-term debt because interest rates are going up. If they don't, I'd get them refinanced right away and get some good, strong, long-term debt on them. And then I'd go buy more houses. I don't see the rates of return being occurring as a passive investor. I actually myself stopped being a passive investor recently because I wasn't seeing the returns that we used to get from it. Although I still see some people getting good returns, but they're getting returns on deals that were put into play 2-3 years ago. The deals that are being purchased right now, I don't see the promised returns being as high as I can get doing other things, a la being an IRO, independent owner, buying my own stuff. I can get better rates of return and get better depreciation coverage for myself doing individual deals, whether it be single-family houses, small apartment complexes, or commercial real estate deals. So in your particular case, I don't think it's time to cash those houses out and go into passive. I think it's time to stay with those if they're getting good cash flow and go get some more. And if you need to get some money out, then do some type of a loan arrangement to get the money out of them. For instance, you could either refinance them, or in some cases, it's better just to take a loan based against the equity left in the house. I forgot the name of the loan right now. I don't do them, so again, I forget some of that stuff, and I'm not out there consulting every day like I used to, so I lose some words. All right, but definitely, I would not sell those houses to move on to passive investments at this point. Now, give it 6 months to a year, and some of these prices start coming down, and some of these people that own these properties are running them improperly. They might start to feel some of the pain and want to sell and be more motivated to sell at a realistic price. And when that starts to occur, then I'll let you know that, hey, I see it back, it's happening, time to get back in and get in with a good operator and be a passive investor. But until that point, like I said, right now, there's too much volatility. Let's give it a week, 2 weeks, a month, I don't know. Like I said, that's my big question is, how long does it take for all this to play out? How many more mistakes do the Democrats have to make before the economy just says, bleh, we give up? I don't know. Interesting point. Next one is, I hear this talk on the radio regarding the federal government looking into creating a digital currency like Bitcoin. Do you see this happening, and will it have any effect on the way we do real estate transactions? No, I don't see it happening, my friend. The power of a government is to control its currency, for it to be able to create capital, for it to be able to protect that creation. And I just don't see them being able to do that with Bitcoin. Because if they say Bitcoin's okay, if they go to a Bitcoin currency, then what's the difference between every other Bitcoin currency out there? You know, because they can't back it with the federal government. You know, they back that paper dollar bill with the federal government, but they can't back Bitcoin because it can be hacked. And say, well, it's got the 2,566 layers of encryption. And somebody's going to write the 2,567th level of unencryption. And all your money's going to be gone. It's going to happen. Of course, it could happen right now. They can suck it right out of your bank account right now. But I just don't see it happen. Now, will it happen eventually? Someday you won't even have money. You'll have digits on your fingers, and you'll just transfer digits by touching things. Who knows? But that's, in this day and age, I don't see it happening. I don't really understand Bitcoin. I have to bring that point up. I don't understand how you can create Bitcoin. You can create money, that money can go up and down in value and at the same time be used to buy stuff. It just doesn't make any sense. You know, why would people do it? And why is it an investment? If it's an investment, is it that volatile? I don't know. And you say, well, Del, that just proves that you're ignorant. Absolutely ignorant of this topic. I don't see Bitcoin paying you a dividend. Now, it may go up in value, But that's speculation. And one of the things I learned early in life is I don't live by speculation. Rule one, never lose money. So if Bitcoin can double in 6 months, Bitcoin could go in half by 6 months, or 3 months, or 1 month, or 1 day. Who knows? And so I don't speculate. So my answer is, whatever it's going to do, I'm not going to be a part of it. Take a short break. Be right back.
Welcome back. Now here's some more unconventional wisdom to set you free from the man on a mission to retire America, one person at a time, Del Walmsley.
Welcome back to Del Walmsley Radio Show. Today we're in the mailbag, answering emails people send to us. The next one comes from Florida. It says, I'd like to know what to do with my situation. I live in Florida, and I have been preferred member for a year or so. I have invested in my first passive deal in August, and my second one will close in March. These are hybrid deals, so I have not received any distribution yet. So in this situation, what's happening, guys, buying into an apartment complex that's being renovated, and so there's no distributions on the deal until the renovation is completed and property is stabilized, and they start paying out distributions. They know this going in, that's what this kind of deal is. And this one here is a hybrid, which means that it may have some slight amount of distributions early on, but it's not really supposed to start distributing until later. It goes on and says, I would like to quit my job as soon as I can. I'm not in danger of losing my job. I'm just tired of working 60 hours on a route delivery job. I don't know if age matters, but I'm 36 years old and my expenses are around $2,000 a month. I'm about to receive $185,000 on a refinance for a paid-off home. Would you continue to do passive deals? Would you do single family or an IRO? I wanted to take out a lead, but because I'm not comfortable with doing that with no experience, and I agree, you shouldn't do that if you have no experience. If I do an IRO, could I get something for that price and I have no experience? Having no experience is not a problem. We teach you and we help you. If you do single family, I would use your team, realtors and managers and lifestyles, and buy in Texas. I just keep hearing your radio show and it makes me want to get my life back. Guy's 36 years old, and I retired at 34 years of age. So when you hear the guy at 36 and you're 40, 50, 60 years of age, you're thinking, wow, this guy's really lazy, right? I've worked all the way to 40, 50, 60 years of age. This guy wants to get out at 36. Hey, I wanted out at 36. I wanted out at 30. I got out at 34. Luckily for him, he's only got $2,000 a month in expenses, and that's not that hard to cover. So let's take a look here. He's got to get that money up to a certain rate of return, either by doubling the amount of money in his deals or whatever. So let's take a look at what we're talking about here. He needs $24,000 a year, $24,000 a year, divided by $185,000. He needs to get a 12.9% return on that money, and he's done. Now, you got to see, Del, that's too simplistic. No, it's exactly the truth. If he can put together, and I would suggest in this case, single-family deals, because single-family deals earn anywhere from 10 to 25% cash-on-cash return, plus capital gains and equity capture. I think the situation, these houses, deals that we're doing, are still earning 40, 50% return when it comes down to the internal rate of return on these things. So for him needing 13% return, 12.9, he has no problem doing that. Now, I know that makes many of you uncomfortable because you're saying that you can't look at it that way. Well, what about other things? Like what about getting insurance, and what about getting a new car, and what about getting this, what about getting that? And what I'm telling you is the way you eat an elephant is one bite at a time. You have to look at it in chunks. And the first chunk is just getting into a business that works, that pays dividends and distributions like real estate. That's step number one. Step number two is building up the amount that you earn. I have many, many different types of businesses. But you see, what I do is I started buying commercial buildings, and I bought them, and right now I'm up to $75,000 a month in income from commercial buildings. I got one more commercial building to build. I'll hit $80,000 a month, and that's it. Then I'll go on and buy something else because I keep my portfolio diversified. But I have apartment complexes, right? I have real estate companies. I have software companies. And I have commercial real estate deals. I used to have single family, but the single family cash flow was so small and the amount of effort per house compared to the cash flow wasn't worth it to me, and I had to move into apartment complexes. And, you know, my apartment complexes make me a ton of money. My commercial real estate makes me a ton of money. My real estate agencies make me a ton of money. My seminar business makes me a ton of money. And my software companies make me a ton of money. So the bottom line is that I build up each of these streams. What this gentleman needs is to start with his first cash flow stream. I recommend single-family houses would be easy for him. And he'd easily be able to come up with $2,000 a month in cash flow. And when he does that, he has bought back his life from corporate America. He said, well, Del, he's not going to be rich. No, he's not going to be rich at that, but he's going to be free. Now he can get a job he wants. He can work less hours at the job he already has. He can get a job he likes more than the one he has. He can continue to grow his portfolio over a period of time. He's only 36 years old. And by the time he gets to be 66 like me, he'll be a multi-millionaire if he starts right now. But if you worry about the fact that starting isn't making you rich, then you're never going to start and you're never going to get there. You've got to start somewhere. I started with one rent house that made $220 a month positive cash flow. I was so excited that I made $220 a month positive cash flow. I bought 3 more of them the next month. And then I had 4 of them within 2 months, which was $880 a month positive cash flow. That's how I got started. How are you going to get started? You got to start, right? The first step of the journey has to be taken. You have to start somewhere. If you don't, just like I read in that earlier email, you can listen to me for another year, 2 years, some people 5 years, 10 years. And then you finally wake up and go, man, I should have done something 5, 10 years ago. But I didn't, because I didn't think $2,000 a month was worth it. I want $10,000 a month, so why even start? Because you have to hit $2,000 before you can hit $10,000. That's the whole crux of it all.
Del Walmsley on how to live the lifestyle.
I remember a preacher one time, he took over a church. He started giving a sermon, and everybody applauded the sermon, thought it was really good. They congratulated him, that's really a good sermon. Then the next Sunday, he gave the same sermon again. And they go, yeah, that's a really good sermon. And then the third week, he gave the same sermon again. Finally, the church elders pulled him aside one day and said, hey, do you realize you're giving the same sermon every day? You haven't changed it up in 3 weeks now. And he looks at them and says, yeah, and I'm going to keep giving it until you guys get it. That's the way I feel sometimes. I feel like I've been giving the same sermon for 26 years. And some of you get it, and bless your hearts and souls. Man, I'll tell you, like last night I spent some time with people. There's some great members of Lifestyles. I love them. And the accomplishments that they've made are incredible.
So remember, life is a journey, not a destination. And the journey has got to be fun. Have a great day. We'll see you tomorrow.
The information and opinions you hear on the Del Walmsley radio show are those of the host, Del Walmsley, his guests, and his callers, and do not necessarily reflect the opinions of this station, its affiliates, its management, or advertisers. The Del Walmsley show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Del Walmsley show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.